today. We actually previewed that we would be on at noon. But in my preview on Instagram, I did say ish. I did say we'd be on at 12-ish.
Yes. This is like a party. It is a live video party. And you know that if you say that it starts at 12, you show up at 12:15. You know.
Exactly.
You make your entrance. So we are making our entrance. She's Bobbi. Yes. I'm Joe. We're doing 2 episodes of Money with Friends today, guys. And if you're new to this shindig, feel free to comment. And as you comment in the chat, you know what? You're going to be a part of the show if we're able to get to it. We try to get as many comments on as possible. And we've got 2 very commentable pieces today. Commentable is my new word.
Yes. You know who? I feel like the first person that started, like, first really famous person that started making up words was George Bush, the president, George W. Bush, the younger Bush president, 41, I guess, right?
That's the same. This is the second time we've talked about W. I've been in a conversation about W today, which is amazing. Mindy's here. Mindy from Bigger Pockets Money.
I'm sharing on Twitter. So we're now on Twitter, which is a relatively new thing. And so what I'm trying to do, we haven't figured out how to put it on our personal, it's on the at Money Friends Pod Twitter, but then I just shared it on my Bobbi Rebell Twitter so that more people can join us. I haven't figured out how to do them directly first. So yeah. So it's 12-ish as our friends that did on, that followed me on Instagram, because I did try to preview our stories. I'm just digging a hole for myself, Joe. But anyway, we previewed the show. You weren't involved in this, but I previewed the show for our listeners on Instagram a few hours ago. So they know what we're going to be talking about, and they know that it was 12 noon ET-ish.
As Melissa said, it's ish now. So
it's ish now. Yes.
It is now ish. I'm going back through. I'm trying to find the thing, and I will retweet it as well so that we have
Oh, by the way, update, in case I forget to say it, the voting is going on for whether there's still opportunity in work from home related stocks. This is for our Instagram people. If you follow us at Money Friends Pod, you guys said that 47% said that they have already peaked. This is the work from home related stocks, but there's still opportunity, says 53%. So that's what you guys are saying. That poll is still up for another couple hours if you guys want to be part of that. And we have another poll going that will be part of the show, the first show that we're recording here now.
Here we go. And now I just, just got that set up. All right. You guys ready to go?
And you retweeted it too.
I just did.
We're so tech savvy.
Was that your ba-dump that just happened?
Yes. I got notified that you retweeted the show on Twitter.
That's great. All right, guys, let me pull up the who's our sponsor for day one? Is that the read?
No, that's Monday.
Okay, so
Monday is
so Saturday then is NordPass. So let me do this, guys. I'm sorry, I am holding the show back right now.
Well, while you're doing that, if anyone listening, I also on our Instagram at Money Friends Pod did ask everyone. I was having a daily harvest shake this morning, and some of the ingredients were very confusing. They said it had lion's mane in it and ashwagandha. So if you know what those are, please go to our Instagram page at Money Friends Pod and fill in the question and let me know what lion's mane and ashwagandha are as ingredients in my daily harvest shake. Okay. It's like the opposite of a public service announcement is just like, help me figure out why. Do you know what lion's mane is, Joe?
I have no idea. I was just wondering that same thing.
It's in my daily harvest shake today, as is ashwagandha. Ashwagandha.
Ashwagandha. I just like that name.
Ashwagandha. I don't know. But I really want to know what ashwagandha. It must be very healthy.
All right, guys.
You know,
I am.
Joe's
ready
like,
to
enough.
Go.
Let's talk about the stock market. Okay.
All right. I will hit record. This show is for Saturday, October 3rd. Let's go.
September was the first losing month for the stock market since it recovered from its March losses. That was last spring. We'll share what experts say that means for October. It is Saturday, October 3rd. Let's talk money with our friends. Welcome to the Money with Friends podcast. I am certified financial planner, Bobbi Rebell, host of the Financial Grown Up podcast, coming to you from my very grown up kitchen in New York City.
And coming to you from my mom's half-finished basement in Palm Springs, California, where we make the Stacky Benjamin Show. I'm Joe Saul-Sehy.
Here on Money with Friends, we talk about the latest personal finance headlines. We add in the insights and wisdom of our fantastic cast of thought leaders. We mix in some questions and comments from our money friends, and then we leave you with a takeaway to make it your own.
If you don't have a password manager, you're going to want to listen now because today we have a deal on NordPass. It's a 2-year plan plus 1 month free. You'll get rid of password stress forever. Enjoy unlimited premium features and a 30-day money-back guarantee. Save 50% now at nordpass.com/MWF. That's nordpass.com/MWF. I can't believe we're in October already. Where did September go?
It's in the past, Joe. Let's move forward.
Is that the theme, Bobbi, of 2020? Let's just move on.
That is the theme. Let's just get past it.
How about we just have a New Year's?
Move on.
Let's just have a New Year's party now and call it 2021. And just.
I love it. I'm in. I'm in.
Deal. Well, I'm in on talking about the stock market, which we're going to do today. What do we expect from the stock market? Well, not just Bobbi and I, but some people at Marketwatch. Let's see which one of our friends is going to help us kick off today's show.
All right, this story comes to us from Marketwatch. It is by Mark DeCambra. And the headline is, what history says tends to happen after the U.S. stock market logs ugly September losses. September proved to be a bruising month for the main U.S. equity benchmarks, resulting in the first losing month for Wall Street since a recovery rally began in late March. However, history suggests that a terrible September, which is historically the worst performing month of the year for U.S. stocks, could be followed by the indexes outperforming, despite October usually ranking as the second worst month of the year. Now, on the final day of September, the Dow ended September with a decline of 2.3%. The S&P 500 dropped about 3.9% for the month, and the NASDAQ registered a decline of about 5%.
The last time any of these main benchmarks posted as ugly a September performance was 2011 during a European sovereign debt crisis and the downgrade of America's pristine AAA credit rating by Standard & Poor's. Wow, that seems like yesterday. However, Dow Jones market data suggests that the irksome losses that helped to snap the harder monthly win streak from the lows in March when the coronavirus spark decline reached its nadir doesn't have to translate into more carnage in October. In fact, the indexes tend to rise in the following months 70% of the time after losses as severe as September this year, based on the last 10 periods in which the Dow marked a decline of at least 2%, the S&P 500 marked a September slide of at least 3.5%, and the NASDAQ composite logged a drop in the 9th month of the year for at least 4.5%. So I'm guessing then, Bobbi, based on all that information, market timers everywhere, time to throw everything in, mortgage the house to the hilt, get into debt up to your eyeballs, throw all that money in the stock market because, baby, it's going up, right?
I'm doing a virtual mic drop here. I guess it depends who you ask. Like we did a piece, we did a story last week with David Bach on last Wednesday, if you guys want to look it up. And we talked about Barry Diller, and he's basically saying increase your cash position. So it depends who you ask, and it depends how you look at the market. I mean, when you look at these stats, that's kind of a technical analysis. But when you look at fundamental things, there's a lot that some people say they're worried about. People are worried that earnings are overpriced into the markets. The market's ahead of where we're going to actually see corporate America being. We have a lot of uncertainty with whatever's going to happen with the presidential election, although that doesn't happen until November technically. But people are voting now. I got my mail-in ballot in the mail already, so the votes are going in already. And of course, there's also this little, pandemic happening, and we don't know what's going to happen with that, which in turn has a huge effect on the economy. So a lot of uncertainty that is unique unto this year. I mean, 2020, I don't know if we can even compare 2020 to anything in our historic memory.
No, I'm thinking about that, looking at at this data. And this is why I like doing this show, Bobbi, is because we see these headlines all the time. Yet looking at this past performance stuff can be pretty dangerous in a year like this year, to your point. I mean, Bola Succumbi and we talked about the fact that Disney laid off 28,000 people just because we didn't want to have two headlines that were the same. We didn't have a headline today about the airlines and another 48,000 people potentially losing their job. We're going to probably see a lot of that in the next month if we don't have another aid package, and that can change a lot of the game here. So I think this is a year where the past definitely does not equal the future. You know, and I listened to you and David talk about Barry Diller and his feeling about cash positions. Yet, when I talked recently to our friend Phil Town talked about how, yes, there is a chance that this gets really bad, but that also means there's opportunities all over the place. And you don't look for bad times as a time to go toward cash. He says you look toward bad times to actually go further in. So what do you do? I think you're right on. This depends on you and your financial plan much more than it depends on what's happened over the last 10 years.
And it's also so hard to predict. And I think that's evidenced by, we did an Instagram poll at Money Friends Pod for those of you who want to follow us and participate in our Instagram polls and be part of our community there on Instagram. And we asked our Instagram community, we said it's October 1st. How do you predict the stock market will do this month? And the answer is going to tell you a lot. What do you think our friends said?
I think that most of our audience, even though we don't have a big market timer audience, thinks we're probably going to have a bad month. I would say most people think it's going down. So 70% down?
No, and I think this says a lot. It's a virtuals high. I mean, it's down 49. Cool. It's down 49%, up 51%. But I mean, a lot of people voted, so it's really, I'd call it a tie. And I think that says so much.
I think that says a ton. Yeah, that we are in the fog more than ever, right? I mean, not only are we in a fog because we don't know what day it is because we're working from home and family time and business time is all mixed together. We're in the fog about where the hell the market's going, what's happening. And I think a lot of people, and this is also some more kind of sad commentary, is statistics always show that the election doesn't mean as much to the stock market as people want it to mean or build into the fact. But I do get this feeling there's a lot of people waiting to see what happens on the election before they invest. And I think that's also a bad move. That also is a really, really bad move.
I think one thing that could be tough is that as this drags on and people are getting a little more worried economically, if you haven't had an economic impact, that maybe you will have an economic impact, you will have income disruption, maybe you do less investing and more emergency savings. And all these people that are being laid off, and this is tens of thousands of people losing their jobs and knowing they're going to lose their jobs in the next month, those 401k contributions are going to be stopped for now. And that is a lot of money that is not going to be flowing into the stock market. And at a certain point, that could have an impact because that generally does lift stocks if we're being honest about it. All this retirement savings that we've got tied to jobs those inflows into the stock market, into those mutual funds, all of that has an impact. And if that stops in a material way, which it looks like it will, that's not great.
Well, and it's interesting that you say that when you're looking at inflows into different places, because there's actually a reason why the market generally goes down September, October timeframe. A lot of people that have a lot of things going on in the fall, either they spent too much money during the summer months and they're recouping in a normal year, or this year, what are we seeing? A lot of people, and we reported on this before, a lot of people working on those home offices and spend September, now that the weather's not quite as good as it was before in the northern climates, those people now starting to get some of these projects rolling, and those require money. So September, October, generally bad, a lot of analysts say, because of the fact that people have other priorities. By the way, that's also the reason for what people call the Santa Claus rally, the last week of the year. It's because when people get bonuses, a lot of that money just goes into the market, regardless of what's going on in the market. They just put it in the market, and so the market tends to go up at the end of the year. So part of this is year by year, but you're spot on as usual, Bobbi. This year's so different. Who the hell knows? If there's ever a year when that happens, this is a strange year.
This is a very strange year. Definitely unprecedented.
It's very interesting hearing what people are saying as we go to our live audience right now. Melissa, I love her take, which is don't invest money you can't afford to lose. I would say, Melissa, go ahead and invest long-term with money in a diversified portfolio, because I think you'll actually lose less over the long term than you will putting it in a safe place like a savings account. But definitely, if you're going to take bets right now, betting where you think you're going to go, where it's usually, betting, now it really is betting in a fog.
Yeah, absolutely. And we also have Annette in our audience here. She says you can't go wrong with long-term game of dollar cost averaging. Always a good strategy, I think.
Yeah, it goes up.
Who knows?
It goes dollar cost averaging. It goes up, you win. It goes down, you win. Right?
Yeah.
If it goes down over the short run, you bought shares. If it goes up over the short term, hey, you high five yourself because you're brilliant. You did it at the right time. So I think that's all good stuff. Hey, in just a moment, Bobbi and I are going to have our takeaways to talk about what we think and kind of put a hit on this. But first, want to say a big thanks to everybody who has used our link when they went to check out NordPass, because not only will you get a great deal on a 2-year plan and a month free, you're going to get 50% off. You get rid of that password stress. It's funny, whenever I have to come up with a new password, I always feel great when I just click the NordPass button and I see what password NordPass has chosen for me, because it is one, Bobbi, that makes no sense to me, and I don't think it makes any sense to a hacker. So while people can get you anywhere, right, a hacker, it's only a matter of time till they get you. By using NordPass, you'll make sure that all your passwords are different. It's going to take hackers longer. They're going to give up, and they're not going to get all of your stuff. So you can check it out for the first 30 days with their 30-day money-back guarantee. You can also see all the great reviews of NordPass at the site. It's effortless. It actually, I think it's pretty fun, and it makes it so that in my life, the people like my spouse, Cheryl, she and I know where all the passwords are. And so she can go to NordPass, I can go to NordPass safely and securely and know where everything is. Check out the 2-year plan, 1 month free, nordpass.com/MWF. And you're only going to get the 1 month free and the 50% off if you use our link, nordpass.com/MWF. Bobbi, what's our takeaway today about October? Where are you going with your money? You going all in? Are you taking it all out?
Joe, my takeaway is that nothing in this piece tells us that we should sell equity holdings that we have. If you believe the stats, then if anything, October could actually be a good month. All of the concerns we have about the market as of this recording are not new. And if anything, the month is going to be chaos. If any month is going to be chaos, I should say, it could be November with the election actually happening, and maybe all month, because it might take that long to count the votes. So I vote for being nervous about November and just chill in October.
Yeah, I think that Annette hit it on the head, that things are going to get murkier as we get closer to the election. I don't think because it should get murkier, but because it's the way we do it every 4 years. We attach a lot more importance to this one event than really over the long term, historically anyway, we should have. When it comes to stocks, clearly when it comes to voting, everybody should vote. But when it comes to stocks and long-term results, that's a different thing than what's going to happen there at the first week in November. So I think dollar cost averaging, I think Annette got it between your takeaway and Annette's. I don't think I need one, Bobbi. I think we're good.
Okay, Annette, you're hired.
That's right. Annette, you're coming on next time for me. Hey, Bobbi, if people want to help us like they did today on the Instagram poll, how do they do that?
Follow us on Instagram at MoneyFriendsPod. You can also follow us on Twitter at MoneyFriendsPod. And if you follow us on Twitter and set alerts, you can actually watch our show tapings live and ask your questions and comments. You can also do that on our YouTube channel. Just go to YouTube and look for the Money with Friends channel and make sure you're subscribed and set your alerts so you know when we're going to come on. And you can also find out our schedule by going to our website, moneywithfriendspodcast.com, where you can, both there and on YouTube, you can get links to the articles that we talk about.
We have had a phenomenal cast join us this week. Bola Succumbi and, of course, Mr. David Bach this week. Next week, we're going to have another great week, Bobbi. I believe you're talking to Grant Sabatier.
I am talking to the millennial money man himself, Grant Sabatier. Amazing story. He really had no money just a few years ago and really focused on creating a financial foundation for himself and focusing on financial freedom. And so he's got a lot of wisdom that he's going to be sharing with us next week.
And I love the fact that this week I get to talk to a guy that was one of my favorite Stacking Benjamins interviews, Jason Harris, who runs one of the top-rated advertising agencies in the country. I'm sure we're going to talk a lot about behaviors, right? Because he's a guy that affects behavior every day. His job is to affect behavior. So,
yes, the art of persuasion.
Yes.
What is his book? Soulful Persuasion?
Soulful Art of Persuasion, yeah.
Soulful Art of Persuasion. And it's a good book. Everyone should check it out.
Yeah. Grant,
I enjoyed
Jason, Bobbi, me. What else do you want, guys? Have a great weekend. We'll see you back here Monday at Money with Friends. Bye-bye. Bam. Thanks, Rich. By the way, Melissa, I typed right then. I'm like, hey, Gertrude. Hey, Gertrude. Clean up in aisle 4.
Yeah.
It's so sad because frankly, you only have so much time in your day. And I understand that people do things for money, but why would I want to spend my time doing that? I have no idea. Anyway. All right. Let's get set up for the next one, guys. This Gertrude asking me a question. Okay. All right. Second recording. We're going to talk about this as Monday's show, which is a little inside baseball, but kind of.
But it shouldn't be.
No, it should. It really shouldn't be. And it kind of, when I read this headline, it disgusted me. And I know that you're not going to hear this about this stuff in most places. So we're going to get nerdy about financial planners here for Monday. So, all right. So, Bobbi, I'm going to do